Hi there, this is Bill with Smart Trades, and wanted to do a quick update here. It's about 9:20 Pacific time on September 3rd, Friday before the Labor Day weekend. And um, actually, although I had a somewhat bullish outlook in the short term, it's the market has exceeded my expectations so far, um, and I think overall that's bullish. Here's a count I've done on the S&P cash. I think the reason that it surprised me is I think we're into an extended fifth wave. And ideally, in a perfect Elliott wave world, we would see one more push to a moderate new high. That said, on a very short-term basis, i.e. the hourly charts, breadth ratios are starting to roll over. They're still not bad, but they're putting in a lower peak, actually consecutive lower peaks, and the implication of that is that not only is this entire pattern a fifth wave, but if we get a new high, that is a fifth of a fifth, albeit in an extension. If my bullish count is in force, I expect that the market's going to correct down to about 1076 basis the S&P cash, and that would be a good place for a correction to bottom in. If we go through there, I would look at a more bearish scenario, and in particular, if we go through the recent lows down around and just under 1040 basis the S&P. Now here's that same time frame on the Russell futures, and this particular chart is a 60-minute overnight chart. I think the 620 area would be a likely target if indeed we put in a shallow correction. If we hold there in a corrective pattern, I think that's short-term bullish, and that new highs are likely, and indeed we could see a substantial rally, and I'll get into that count momentarily. First, what I wanted to review the very popular bearish count, and essentially, there are variations of how to count this, but the basic idea is that there's 1, 2, 3, 4, 5 waves down of wave 1, and from there we have an ABC correction back up. The problem I have with this count, first and foremost, is that I believe that this first pulse up actually counts best as a 5. And if you count it that way, this entire pattern really counts best as a 3. Now, in Elliott wave, C wave should be 5-wave patterns. And moreover, if you count this entire pattern, count all the swings, 1, 2, 3, 4, 5, 6, 7, a 7-wave pattern, if you will, is an ABC. It's a corrective pattern. It's not an impulse that would form a C wave according to basic Elliott definitions. And let's look a little further here. And again, the other problem I have is that the decline off of the so-called wave 2 here best counts as a 3-wave pattern as well. And folks are counting this as a wave 1 down. Some folks are counting this as an A, B, C, although that doesn't break any Elliott wave rules. The B wave is longer than the entire wave 1 decline, and that just is not proportional and seems to me to be very unlikely. So anyway, let's look at the internals here to better illustrate what I'm talking about. And again, here's the popular bearish count: 1 down, A back up, B back down. B, by the way, also I think counts best as an impulse wave, which obviously negates this count. And then off the low, again, pretty clear to me, impulse pattern: 1, 2, 3, 4, 5 up. You've got a nice extended third wave, a shallow fourth wave, a deep wave 2. It's a classic 5-wave pattern. So to me, this best counts as 5 waves up of A rather than part of a diagonal triangle. Diagonal triangles have internally 3-wave structures in the pulses up. So we have 5 waves up to A, decline to B. This decline, by the way, is a bit problematic to my way of thinking, and then from there we have 1, 2, 3, 4, 5 of C. So this entire rally, to me, best counts as an ABC, and we'll get into that in a moment too. So Again, here's that decline that folks are counting as 5 down. I just, I don't think it best counts as 5 down. And again, just to back up briefly, if you count this as an ABC, it's not a 5-wave structure, and C's need to be 5-wave structures. And finally, here's the bullish count. I've posted this several times in the past, and here are the internals the way that I think they count best. I won't argue that this is 5 down, but I'm going to call it A, rally back up, A, B, C, B, and then another 5 down to form C. This whole entire pattern I'm labeling as A. Then we have, again, because of the internal structure here, I'm labeling this as a 3-wave pattern A. We have a 3-wave pattern down B, and if we do indeed rally further from here, an A equals C scenario would take us up over 11,000 on the Dow, perhaps as high as the old highs, and that would be what I'm labeling as B of a flat. I think that's the way this thing counts the best. If we drop through these lows, I certainly would reevaluate. I would be alert to the bearish side of the picture here, no doubt about it. And again, I mean, ultimately, my perspective is somewhat bearish, as you go out a little further. I'm just saying that before we go down later this fall, we're going to go a bit higher. We're going to go back up and perhaps test the April highs. We shall see. But so far, I think breadth, volume, wave structure all favor that scenario. And we'll, as always, take it one step at a time. A corrective decline off of these recent highs, bodes well for the bullish count. If we start having impulsive drops, and again, if we take out those recent lows, that would tilt me back into the bearish camp. But for now, I would look to actually sell this rally. I do think that we're going to see a bit of a decline again, as I noted that we're probably peaking on the very short term. But if the decline off of here is corrective, I think that really reinforces the bullish count. Anyway, thanks for watching. If I don't post again, have a great weekend.